All right, welcome everybody. Here's another episode of Junior Resource Investing, the podcast dedicated to deepening your understanding of the junior resource sector and some important and exciting plays within it. As always, I'm your host, Matthew. As always, this disclaimer here is please remember that this is not financial advice. Neither myself nor my guests are financial advisors. This podcast is for entertainment purposes only. For full disclosure, please check the YouTube notes below. With that out of the way, I am pleased to present our latest guest, Ben Turney, who is CEO of Kavango Resources. Kavango Resources is a primarily copper polymetallic explorer operating in the stable democracy of Botswana. 3 large, distinct land packages make up its opportunity, KCB, KZS, and Ditau, of which this interview will be focusing primarily on the Kalahari Copper Belt, or KCB for short. While it is pre-discovery, the allure of this company is that it has a legitimate shot at discovering a true Tier 1 asset. It trades in London under the ticker KAV and on the OTC in the States under the ticker KVGOF. Ben, this is our first time chatting face-to-face. It's nice to finally get a chance to meet you.
Thanks very much for having me, Matthew.
Yeah, no, thanks for coming on the show. So why don't we start out? This is how I usually always start my interviews. 30-second elevator pitch on Kavango. Do you mind just giving us a brief overview, what it is, why is your story compelling, and why should investors care about your story in particular?
Well, you've pretty much given the pitch already, Matthew. We've got a great shot at making a discovery of a Tier 1 asset in Botswana, which is one of the best mining jurisdictions in Africa. So we have 14,500 square kilometres of ground spread across 3 projects. And the metals that we're going for are obviously going to be the main drivers of the green revolution over the next decade. So copper and nickel are our primary focuses. And of course, if we can make discoveries on our ground, it will be transformational both for our company and we also hope the areas that we're working in.
Perfect. Do you mind just brief rundown of how you ended up with Kavango in your current position?
Absolutely. So I joined the company first in April 2020 as a consultant. This was obviously when COVID first hit and the markets had tanked. So Kavango was a company that was in need of a bit of support. You know, the former board, they hadn't done the best job in the UK and the company's shares were trading at an all-time low and a bailout financing was put together. It was only £400,000, but I was asked by the people who put that money into the company to join Kavango to help them work on their investor relations, because one of the key feelings was at the time was that Kavango has this enormous opportunity in front of it. The land package that the company had built up is genuinely highly prospective in an extremely underexplored area of the world. Botswana is 70% covered by Kalahari sands. And what that means is that the regional geology is pretty much all obscured from view. There is some outcropping, but not so much because of the presence of these sands. So what that's meant is that even though if you look at Botswana on any geological map and where it sits on the western edge of the Cap-Vale Craton, and these cratonic edges where cratons split apart and move together, and you've had enormous amounts of magma that have passed through these regions over billions of years. These are the perfect ingredients, the perfect setting for the type of deposit styles that we're looking for our projects. But because of the presence of these Kalahari sands, there's been very little exploration conducted over this because technology simply wasn't sophisticated enough until relatively recently to enable companies like ours to apply modern geophysics to get a view of what might be beneath the surface with the various types of modelling that we do, with a view to identifying drill targets to go and explore for these large-scale deposits. So it really is an incredibly exciting jurisdiction to be in. But the company hadn't really communicated that to the market. There wasn't much awareness of the business. There wasn't much awareness of its message or its direction. So I went in to start with as a consultant. It went very well over the course of 2020, and we took the shares from 0.8 pence per share up to 3 pence a share, so a very good return over the course of the year. And at the end of the year, I helped the company put together a financing with £2 million in November 2020, with broker contacts of mine in the UK, First Equity. It's a company that I've been very close with in the past. I know them very well. I brought them into Kavango, and that really was transformational for the company. At that point, that was the most money the business had ever raised, and it reflected the success that we'd had over the preceding 6 months in terms of how we deployed pretty limited funds, but we were smart how we used the money. The opportunity then came up in December, and I was contacted by one of the former directors saying that his colleague, Michael Foster, who was the former CEO. Michael was 71 at the end of his career. And the job of being CEO of a company like this is extremely demanding. It takes a lot of energy, a lot of drive. And, Michael was really looking to go and enjoy his retirement, which was entirely reasonable. So I was asked if I would join the board of Kavango with a view to taking over Michael's role. So I joined the company in January 2021 as a director of the business. It took me about 5 months to get my hands on the various levers and to make sure I definitely wanted to take this role on. When I first joined the company, it became clear to me quite early that there was a lot that needed to be done within the business. So there was a lot that needed addressing operationally within the company, a lot of improvements we needed to make. We really did need to bring this business into the 21st century. So that first 5-month period, I just wanted to make sure that, I felt that we could achieve this together and that this company could be made a success. And I was then appointed CEO, I was confirmed as CEO then in June. So it took about 5 to 6 months to get to that point.
Interesting. I think that you say a couple of interesting things there. I think that the junior sector is such a funny combination of hard geological truths and marketing, right? So marketing without geology is just fraud, and geology without marketing is just an orphan story, right? So it does absolutely take both for this to be successful in this sector, right?
No, I think you're absolutely right, Matthew. So one of the things about this space, and this is something I often say to people, and the thing is, I'm always surprised how few directors actually get this. They're actually running two separate businesses. You have your business that's doing whatever you're doing operationally, and then you have your market-focused business. And I love what you just said. The companies that are just market-focused, are just simply marketing, those are typically fraudulent, and ultimately people end up losing their money. But the companies that just focus on their operations, that can also be quite naive, I'm afraid, because this public market space that we're in, it's a brutal environment. You really need to tread very carefully. And I feel like every day you have to sort of get out of bed and pick up your sword and shield and be ready to do battle in this space. You really have to have that sort of mindset for it, while at the same time making sure that your business is doing whatever it's doing operationally, and that you're taking care of the team and you're a good employer and delivering in the field. So you have to get the balance between the two to be successful in this space. And I think there are a lot of good companies out there on the operational side, but because they don't get the marketing right, they get their financing strategy wrong, they get their marketing strategy wrong, and that can end up killing their opportunity and also shareholder value as well. So it really is important to fuse the two together and make them work in harmony.
Perfect. Yeah, no, and I agree. I always find it sad when you have a good geological model or a strong, proven resource that ends up diluting into oblivion, I suppose, right? So no, well said. Typical way that I work these interviews is we start kind of large picture, macro scale, 30,000 foot view, and then we start to drill down into more company specific, right? So do you mind just going through very, like I say, kind of boilerplate overview, share structure, options, warrants, insider ownership? Where are you at for share count and average cost basis?
Sure. So currently, and I need to make sure I quote my figures correctly because there's a bit of shifting sands, but on our last shareholder presentation, we currently have insider ownership of 27%, but then there are a number of other shares that are held by founders of the company as well. So that, I believe that takes the number up to around about the 23 or 24%, but you have access to our presentation. You can see the exact figure. We currently have 435 million shares in issue. Now, I know that's obviously a different model to what you're used to in North America. In the UK, companies do tend to issue more shares. So I'd say we're sort of, in a fairly decent place as far as a UK small cap company goes in terms of overall shares in issue. And then on top of that, we have about another 160 million warrants that are outstanding, all of which are due to expire next year. So part of the financing strategy that I put together for the business, with each financing round that I've conducted over the last couple of years, we've put in place a warrant structure so that in the event we had success, we would have a very clear pathway to additional funds. Now, the way that I structured all of those packages is quite intentional, is that each tranche of warrants expires in a different month next year. So the first set expires in April, then May, then August, and then December. So obviously, if we succeed with our current efforts in the KCB, in the Kalahari Copper Belt with our drilling, we expect our share price to perform extremely well. And then obviously we have that warrant bank available to us. But of course, if things don't work out to plan and those warrants then do fall away, that's a bit of a resetting of the clock.
And then do you mind telling the market here, what are you in for and what's your average cost basis?
So I currently own just about 2.5% of the company. I've just brought my cost base down because I dealt 2 days ago. So I took the advantage of not being inside for once. My average cost basis, I think, is around about 1.8 now. But again, I'd need to go back and double check that. I should have prepared that before this interview. But I've got about just under 2.5% of the company. And again, this is all in the public domain as part of our disclosures for obviously market rules.
Mm-hmm. And you did just take down £15,000 worth of shares just a few days ago. Is that correct?
Yeah, correct. Exactly. Yeah. So we made those purchases. So we obviously announced that we had the drill rig was mobilised. At that point, we were cleansed of anything that might be inside. My COO, Brett, and we both bought £15,000 worth. We did it towards the end of the trading day. And again, that was quite intentional because the advice we got was obviously we put the announcement out, let the market then trade for a day. There wasn't actually much volume in the stock as it happened. We then did our purchases towards the end of the day just to make sure there was enough clear water between us, that announcement going out, and obviously pretty much a full day's trade.
Mm-hmm. And then, so do you mind running through here? Next step is just cash on hand. Where are you folks at? You have obviously a drilling program that you've just started. You have cash on hand for that, but where will you be at the end of that?
So we've just announced our interim results, which showed our net current asset position. I believe it was around about £800,000. So those are the figures that are in the public domain. What we're looking at with the company is, of course, we have this major drill strategy that we put together and we've announced recently. Now, obviously, we don't have the funds to cover all of that. So we know that, but that was also always quite clear. I don't think anyone was expecting us immediately to go and drill 37,000 meters. However, what we have put in place is a financing strategy where we're going to use one of our private vehicles, Kalahari Resources. And the plan is, which we announced last year, but with market conditions as they were, we weren't able to move forward on that project then. We are going to be looking at an IPO of Kalahari, we believe, as one of the ways of taking this forward, the way of financing this KCB drill strategy.
Excellent. So why don't you, this is an opportunity for a decent transition here. Do you mind giving just a brief overview, and maybe let's, in the interest of being judicious with our time, focus on KCB, if that's all right with you, just because that's where we are in the current focus of the market. But just the history of the land package, is there previous exploration done on it for copper, nickel, or otherwise other resources, right? And then can I run that through for us if you don't mind?
Sure. So if we start with your 30,000 foot view at the beginning, if you look in the Kalahari Copper Belt and the historic exploration there's been, it's focused in the northeast in Botswana and much further to the southwest in Namibia. And in the middle, there's this zone that hasn't been explored historically. Now, the reason for that is because this is where the Kalahari sands are more prevalent. In the northeast in Botswana and in the southwest in Namibia, there's much more outcropping geology at surface, which has led to these major discoveries that are all either being mined at the moment or are currently being brought into production. Now, one of the things to be aware of in Botswana is that the way that prospecting licenses are awarded, you have a 7-year period, which is basically guaranteed so long as you meet your spending commitments. But that 7 years is broken down into 3 individual sub-periods. So the first term is 3 years, followed by 2 sets of 2 years. Now, what happens at the end of the first 3 years typically is that the Department of Mines requires that you have to give up 50% of the ground that you've applied for and worked on. The reason for that is obviously to make sure the sector stays fresh and there's a continuing level of activity. Now, what can then happen is that if as a company you haven't met your spending commitments, at the end of the second 2 periods, the second and third period, so years 3 and years 5, you can be requested, or they can request that you give up further ground, depending on how much work you've done. It is at their discretion to enable you to keep it. But what this has basically meant is if you look at the prospecting license map in the northeast section of Botswana, it's been very balkanized. You have lots of these small, irregular shaped licenses where basically when companies have given up ground, they've given up what they felt was their least prospective ground. And it's a patchwork of these much smaller licenses which represent or reflects how much work has been done up there. As you move over towards the west, so to the west or to the south and the west of Hansi, the town which is sort of one of the main towns in the Copper Belt, what you see is that the license areas are much bigger. And basically what that tells you is there's been no historic exploration there. So one of the great things about Kavango is that with the land package that we've put together, we've taken advantage of the fact we've been able to secure nearly 5,500 square kilometres of ground in relatively few licenses in an area where there really hasn't been much historic exploration work. So there's been very little drilling, there's been very little geophysical surveying, there's been very little soil sampling. So it very much is virgin ground for us, but is also highly prospective. We're surrounded by Sandfire Resources, Australian-listed company, multi-billion-dollar business. They're huge in the Kalahari Copper Belt. And immediately to our west over the border in Namibia, because some of our licenses hit the Botswana-Namibia border, Rio Tinto have nearly 10,000 square kilometres of ground that they have, which basically is immediately adjacent to ours. So we're definitely in the right postcode. And with the advances in technology that there have been and some of what Kavango is able to bring to the region, we're deploying technology that hasn't been used in the KCB before. And we believe that's going to be integral to the opportunity for us and our ability to unlock this region.
And I think it's a point well made. Earlier, you referenced, 21st century exploration and what we can do with geophysics now. And I think that's just the future, right? That all the low-hanging fruit is picked geologically, right? That we are having to go undercover. And then that is just the future of exploration, right? So I think it's a point well made. Do you mind? So I think when people, especially maybe North American listeners or people who are not well versed in the minutia or granularity of Africa, is that when people hear African play, they think of horror stories of Nigerian oil exploration or something, right? Where the delta is destroyed or there's corruption or that sort of thing. And I think that what they have to understand is countries like Botswana and Namibia that's night and day comparatively, right? That jurisdictionally, Botswana is a completely different kettle of fish. Can you just maybe explain or discuss what you've seen on the ground or why it is such a stable Western style democracy and what that means for you?
I would honestly urge anyone to go to Botswana and visit the country. It's an incredible country. It's beautiful. The people there are amazing. The infrastructure is fantastic. And just, everything about the country is great. It's a wonderful place to live. It's obviously very hot. A lot of the year, he's in a sort of desert environment, but it's an amazing country. One of the great things about Botswana is how well organized it is. The Botswanan national mindset is very much sort of collectively focused, and they really do put a lot of pride and effort into how they organise pretty much everything, and that's reflected in the minerals exploration space. The country gained independence in the mid-1960s. It's been a stable democracy ever since, with stable transfer of power. It's got an extremely advanced economy, sort of everything that you would see in a city in somewhere like North America or even in Britain. You see pretty much all of this in Gaborone and the main city in Botswana. The actual infrastructure as well is fantastic. It's got amazing roads, power supply. I mean, it really does have everything that you need. But one of the great advantages of it is the population is relatively small. So Botswana is a country that's about the size of France. I'm not sure what the comparison with somewhere in North America would be, but it's a very large country with a population of just over 2 million people, most of whom live to the east or in the southeast. So from an exploration perspective, you made a really good point about just now about how the future of exploration is looking for buried targets that are underneath cover. One of the big challenges with deploying geophysical methods is the background interference. So if you have things like fences and power lines and everything that sort of human activity creates at surface can really interfere with your ability to use remote sensing technology and penetrate below the surface. You don't have that problem in Botswana. And because, as I said at the start of this interview, Botswana is covered 70% by these Kalahari sands, where it actually sits from a geological point of view, were this anywhere else in the world without that sand cover, I'm certain that they would have made major discoveries already, but just simply the technology wasn't available to unlock this region. So it's the Mining Act there has been consistently defended ever since Botswana gained its independence. And it's a country that really is run with a very stable rule of law as well. So from a commercial perspective, it's a country you can have a great deal of confidence in. And if that's also reflected up in the Kalahari Copper Belt as well, where not only have you seen quite a few significant discoveries there, and a great deal of production is coming online over the next 18 months for copper production, but you've also seen a lot of corporate transactions. There's been quite a lot of M&A activity, even during the bear market, where you've seen companies have been taking one another out. I think that also just reflects what a great country this is to work in and how much confidence investors can have investing there.
Yeah, excellent. So I'm going to transition more into more specific questions here. 2022 drilling. So you have completed a small drilling campaign on your KZS target, the land package, and as well as on your Ditau, both of which, came up with interesting enough evidence that would warrant further exploration, but not that sort of headline-grabbing news release, the discovery hole that everyone always is kind of praying for and waiting for, right? But that's in the past, like you say, that information's in the public domain that we can find easily. I think that maybe what's more relevant or to this conversation is that pointing forward, you just announced a very ambitious, nearly 38,000 meter drill program, 188 potential drill collars. And more immediately is this, I think it's 1,250 meter 6-hole program just to kind of get your feet wet in the KCB. Do you mind just running through, I guess, your 6-hole target to initially start out with, and then maybe what your priorities are, or what's the logic behind where you're going with the rest of it, if you don't mind?
Sure. So we've pursued painstaking exploration within the KCB over the last year. I think shareholders and investors, it seemed like it's been going quite slow. But one of the things to understand is if you can try and imagine like how large an area 5,000 square or 5,500 square kilometres is, it really is a lot of land to cover. So we've had to go through the right steps to make sure we were focusing on the right areas. And then when we're in those areas, making sure we're doing the right work to maximise our chances of success. Because what we know about the KCB, where in the KSZ, Kalahari Suture Zone and the Ditau, those drill programs, they've actually delivered a bit more than you just suggested, Matthew, because what they've actually done is open up the doors for potential JV partners. But just sticking on the KCB for now, those two projects have been very much proof of concept. Deep belief cover, very little in terms of what's known about the underlying geology. In the Kalahari Copper Belt, the exploration model, the hard work's already been done in the past because a lot is known about the deposit style. The deposits have all been consistent. They're all sitting within the right sort of geological formations. And it's just a case of actually looking for those and deploying the methods that other companies have done very successfully. But the point is that this work does take time. So our main focus has been on geological mapping, so surface mapping, wherever we can find any geology and what that can tell us about what's happening subsurface. But then we've done an extensive soil sampling campaign as well. So we've run over 10,000 samples of soil sampling. I mean, that's a lot of samples that our teams have taken that have then needed to be processed, sent off for lab testing in some cases. So we've done all of that work. And so far, what's been really, really pleasing to us is that we started, again, like using your analogy, that 30,000 foot view. What do the existing regional geological maps tell us? Where do we think would be the best places for us to start? Then what we had to look at is, well, this is what's already known about the regional geology. We needed to go out and confirm that. And in a number of cases, we've actually shown there have been some mistakes that have been made on the official maps. We've actually uncovered different interpretation of what we believe is happening. And that's helped guide our exploration as well. But then in particular with the soil sampling that we've done, what's been really, really encouraging for us is the results from the soil sampling and where we've had these particularly strong readings of copper, which obviously is our primary target, but also zinc as well, which is a pathfinder element when looking for these types of deposits. We found that the accumulations of both zinc and copper, they appear to have aligned with the subsurface geology, what's known about it, what's actually been mapped. So we've got two separate data sources that appear to correlate, which is very encouraging. On top of that, we've done a number of geophysical surveys. We've used a tool called the Turney, which is used in surveying to get an idea for the depth of the sand cover. And we've also flown airborne electromagnetic surveys over the regions, and we've done some other survey work as well with this CSAMT technology that Kavango is, say, the first to bring to this region. And again, what we're seeing from the results of the geophysics is it aligns with our mapping, it aligns with the regional mapping that had already been done, and it also aligns with the soil sampling. So this is almost like a sort of tick box exercise where you go through the different stages, and the more ticks that you get, obviously the higher confidence that you have drill targets that could yield a discovery. In terms of this first campaign, these first 6 holes, our drill partner, who we've worked very successfully with in the past, Mindea and Equity Drilling, they've drilled all of our campaigns so far in very technically challenging conditions. In the KCB, it's a much more straightforward campaign we'll be running. But they've been active with a multi-purpose rig. Now, that's great for us because it means we can combine both RC drilling with diamond drilling. So RC will enable us to cover a lot more ground a lot more quickly. Then if we hit something that's really interesting, we can immediately switch over to diamond to try and then obviously take out drill core with a view to learning much more about the specifics of the geology that we hope will be a discovery. We're only doing 6 holes at this stage in the first instance because Mindea, the rig's actually been booked by another company. So Mindea was already active in the region. They had a window of opportunity where that program paused, or they've been reviewing the data, and they've had some pretty interesting results that have come out. It's not in the public domain because this is within a private company, so I can't really say too much about that. That's not really my place. But that program's on hold while they're reviewing the data. The drill rig is then going back to that prospecting license after they've done the first 6 holes for us. And our plan then is that once Mindea has finished this work with the other client, they'll then immediately come back. And I expect we'll probably mobilise back to 082 and work our way down this 27-kilometre strike, which is our main target area. Again, 27 kilometres long. This is a very big target zone for us to look in, where we've got some really encouraging copper in soil anomalies. From what the geophysics is telling us, we've got some great looking targets. So my gut tells me that 082 is the place for us to focus on for the time being.
And so, it's a very interesting moment coming up. It's transformative or critical moment here coming up. I guess I'll take a half a step backwards here. Any exploration process starts as a science project, right? And so that I think sometimes people are far too impatient in their expectations of, okay, first drill hole has to be a discovery hole, when really, oftentimes just proving the exploration thesis, the geological thesis behind your exploration, if you can prove that, even if the hole is not economic grade, that's a massive win, right? Exactly. And so, sometimes it takes 6, 12, 18, however many holes, right? There are famous examples of tier 1 deposits that took 20 years to master, right? But the issue here with Kavango is that your bank account is depleting gradually as we go here, right? And so you're at this very important 6-hole drill program that in a vacuum is not a make or break thing, right? It's a brand new virgin territory, as you said. 6 holes is barely even scratching the surface of the potential. But you're kind of at this very gutsy moment for you, where with limited funds you started this drill campaign, obviously in hopes that it will kick off a catalyst in a positive fashion. But I mean, this obviously to me is speaking to a great deal of conviction for 082, as you say. But I mean, I guess I'm not even sure where my question is buried in all of this, but where are you going with this, right? I mean, what happens if, best case scenario, it's easy for us to imagine what happens. Success makes financing so much easier. But what happens if these 6 holes are scientifically a success and prove your thesis, but they don't turn up that economic grade? What happens then?
Well, for a lot of companies, what typically happens is, their share price craters and the business is in a lot of trouble. This is really where I step in with my background and my experience. The strategy, the commercial strategy, and again, we talked earlier about the fusion between the 2 businesses that you run, the balance you need to have between the 2. My background is public markets. I get how this game works. So the way that I've structured Kavango is, as much as possible, I try to insulate the business from the mercies of the market, because it's a brutal space, and especially in conditions like this. So obviously we've not sort of talked too much about this because plans are sort of still coming to fruition, but this is in the public domain, so I can talk about it. The strategy that we have with Kavango is we're looking, on the one hand, with the KSZ and the Ditau projects, we're looking at potential JV partners for both of those. We have announcements out about the KSZ, where we started this process with Tamasis, who we've engaged, who've been working on our behalf, looking for a KSZ partner. We've had a number of NDAs come in from large firms. So that process is that's bubbling along in the background, and we've got some pretty high hopes for that, but let's see what comes of it. Ditau has been a bit of a surprise. We've attracted some interest based on the petrology reports, this IOCG target that appears to be developing. That wasn't what we were looking for. We were following more sort of the carbonatite model. The carbonatite is still in play, but the actual results we've seen suggest to us that there's maybe something else going on there. And the next stage of exploration is relatively low cost and should be relatively straightforward. So that's something that is working in the background. But what we also have, which I touched on earlier, is the Kanye Resources vehicle. And it's always been our intention to spin Kanye out of Kavango. So what that basically means is, in terms of managing our dilution, our main focus now in terms of actually looking for a discovery is within the Kalahari Copper Belt. That's where we believe we have our lowest hanging fruit from an exploration perspective. And what it's now comes down to is a basic for us to pursue an innovative financing strategy to bring in as much money as we can to enable us to pursue this extensive drill campaign that we have lined up. And the way that we're planning to do this is through listing Kenya on another exchange. We're not going to list it in the UK. We are currently looking at Botswana as a possibility, which again is something that we put out there. So, this has been sort of, speculatively sort of discussed. But this is, I think, my instinct now is that this is the plan that we will follow for that.
And so I guess just to be blunt about it, if I may, is that, that as you said, right, I mean, even if this is a geological success, thesis is proven, but it's non-economic, share price suffers, right? Because people, especially right now, the market is not a patient market, right? It's a very, very tough market and a very expensive market for companies to finance in. That dilutive financing at cratered prices, is that on the table for you as a potential thing, or what? Yeah, well, is off the table?
This is exactly the point of what I've just described to you, is that the financing is independent of the market. I understand why you're asking the question, but you're looking at it through the eyes of an investor who's obviously engaged in public markets. If you actually look at the wider market and what's happening, yeah, sure, the copper price has pulled back, but it's still, even at its bottom now where it is, it's relative to its previous highs, is in a very strong position. And the outlook for copper, there simply isn't enough copper or nickel to fuel the green revolution, which I think pretty much everybody agrees is coming. The move towards electrification is going to require an enormous amount of these metals, more than's ever been mined in human history. As a result of the bear market that there was and the lack of investment in exploration and the paucity of development projects that are coming through now, there is going to be a mad scramble for these assets. That's why the smart money is looking to move into copper. So this is why now, you're right, in terms of doing anything in the public markets, it's a really difficult space out there. But in terms of doing a corporate transaction, there is a lot of money out there, and it really is starting to move into our space. When I first joined Kavango as a director, and we started to try and knock on doors at potential partners and potential funders, there just wasn't really that much interest. All the people were after were development projects. They're like, yeah, come back to us when you've got a resource. Come back to us when you can tell us about grades. But of course, what a lot of this money has failed to appreciate was the influence of Chinese money in the space. And what the Chinese did, they've been incredibly smart over this. They have been around the world on this massive buying spree, right in front of everybody's eyes, and they pretty much have picked up most of the world's development projects. So that leaves sort of people trying to get into this space now. Well, where do they go? The Chinese have largely sewn up the developing copper market. That only leaves exploration. And what we are seeing is a really much more increased level of interest in Kavango. So even if we do hit sort of a technical success on these 082 holes, if it can prove up the model, then obviously we go to strategic investors looking to invest into KVGOF Resources and say, right, this is what we've proven so far. This is what our work tells us today. This is how large these targets are. It basically becomes a numbers game. If the copper exists in sufficient bulk and at sufficient grades to be an economic deposit, it's a case of just putting enough holes into your license area until you make a discovery. The business model is actually fairly straightforward in that respect. And that's why we've positioned Kavango in the way that we have in the KCB, by giving ourselves as many drill targets as we can. It's why we've been as thorough as we have. And it's why we've followed as extensive an exploration program as we have. We wanted to make ourselves not only drill ready, but to be drill ready to scale up in the face of this incredible bull market that we are in the early days of. And the fundamental outlook for copper is just huge.
And it's a point well made, and it's something that we have not touched on in this particular interview, but that in previous ones of mine, if for anybody who's a returning listener, it's an ongoing conversation. I think that there's a generational opportunity, if I can be so bold, that in the resource sector, in the metal sector, nickel, copper, right, base metals, battery metals, that we are at this bottom of this very large leg up. Because as you said, I mean, copper, yeah, it's making headlines now around Twitter and all the rest, that more copper in the next 20 years will have to be mined to hit our green energy goals than all copper that has ever been mined in human history, right? And I mean, exactly. It boggles your mind to even think about that, right? And so if we actually are serious about this transition to green energy, there's going to be unprecedented levels of demand that there is just not even close to enough upcoming developing and exploration level companies to meet that demand. And in addition to that is, I mean, I think that we're seeing kind of this collapse of globalization where you're seeing kind of a return to resource nationalism, right? Kind of like Cold War 2.0, where you're starting to see lines being drawn again. And yeah, the global sharing of resources I think is starting to fray a bit, unfortunately, maybe, right? But yeah, I think that's the future, right? So no, I mean, for me, broad level, macro level thesis statement for this is just undoubtedly bullish, right? So
massively.
Anyway,
So you touched on the key point as well, is that how few development projects there are relative to what's needed. And what I think a lot of people haven't really grasped in this space is the lead time between actually making a discovery and then bringing that into production. It can take 6 to 8 years. And that's just from the point you actually make a discovery. There's then the whole process before that where you have to go through, for example, just like Kavango has this painstaking work to go out and make the discovery in the first place. And yeah, the capacity just simply doesn't exist now to fuel the green revolution. And what capacity there is out there, the Chinese have largely sewn a lot of it up. So yeah, I agree with you. I think this is a generational opportunity in our space.
So we're going to transition here into those last couple of questions, and there's just one that I think, when I look through online message boards, and I mean, investor sentiment is not always fair or accurate, but it's still something. I mean, reality doesn't always have to be accurate itself, right? Or the interpretation of reality, you still have to confront it, right? And so I will preface this by saying I'm absolutely sympathetic to exploration companies. It's a dangerous game. It's a very large, long, painstaking game. You have multiple levels of shareholders and permitting that you have to work your way through. Pre-discovery, if you're not a patient person or if you don't like risk, this is not the sector for you. And so yeah, I always as an individual investor, you just have to be prepared for missed timelines to be the norm, not the rule, right? But, I guess transitioning to my question here, Kavango has had maybe a couple of moments in the last little while here where what has been promised has not been delivered, if I may phrase it as such. And then there's been some frustration from retail investors on these bull boards. And, and obviously, your job as CEO in part is to confront these narratives. People are, maybe suggesting that well, I guess I'll just recircle to what I just said. There's a frustration over Kavango's public-facing narrative, if I can phrase it like that, right? Do you mind just kind of touching on these, right, where the promises that maybe weren't executed fully, or can you just maybe talk to us about this reputation, if it's fair or unfair, or how so?
Well, first of all, I'd say in terms of promises delivered, we've done absolutely everything that we said we would do. When I came into this company as CEO, I said we would drill. This year, we've drilled the KSZ, major program, major success. We've drilled Ditau, incredibly challenging environment down at Ditau. Again, big success, a lot of very valuable data, and we're now about to drill the KCB. There isn't another exploration company in London that has done as much work and has approached our projects as aggressively as we have. However, that's not to say we've been perfect. We have made some mistakes this year. We had one comms blackout at the start of the year where we did make a big mistake. And when we were drilling the KSZ, and this is all in the public domain, but I'm happy to talk about it. The drill bit got stuck. It got stuck about, from memory, about 50 meters before the actual target area. And it took about 3 weeks. It was literally stuck in the hole, and we just didn't know what to do. We did all sorts of things to try and sort of get the drill bit turning again. But over that 3-week period, we went dark, and we took a decision as a company, which we as a board have to stand by. That was the board's decision, but it was the wrong decision. What we should have done is we should have announced to the market, said what was actually happening, because then subsequent to that, when we did actually manage to free the drill bit up and we were able to complete the hole, we actually then missed the target. So that obviously just compounded everything. So it was not only that we'd gone dark for a period, the hole itself then actually missed what we were looking for. Even though the downhole survey has told us we've got an incredibly exciting target that we missed by a matter of meters. And in nickel exploration in particular, the difference between success and failure can be that fine. Nickel deposits are the equivalent of a geological lightning strike. They're very small, they're very compact, they're difficult to find, which is why nickel is as valuable as it is. And, if it turns out that this target is a nickel discovery, well, it's not too uncommon that this can happen. You can just miss the main target. You do the borehole EM to get sort of the 300-meter view around the hole to look for the conductor. So all things considered, the hole itself and the project is looking in very good shape, and there's going to be more news about that in the near future. But in terms of our actual comms around that, we definitely could have handled that better, and we should have handled that better. That was our mistake. But since then, obviously market conditions have been extremely difficult. I can't put everything down to market conditions because, I understand that once there's been this negative narrative starts to set in, that can do quite a lot of damage towards sentiment. And, I'm aware of this, but really my job has been to make sure that our team remains focused on delivering our programs on the ground. That is the most important thing. I'm here to act as the public whipping boy. So obviously I have to take, a lot of criticism personally, but I always make myself available to shareholders. I'll respond to all emails. I'll respond to any calls. My phone number is on the bottom of our announcements. My DMs are open on Twitter. So, we really do make ourselves available to answer any shareholder queries or questions, and coming on interviews like this as well. We do a lot of promotion. But what I say about the business itself is I get what's called a Section 793 report every month. Now, that's something very specific in the UK, where you can get a report that will tell you who the beneficial owners of your stock are. So while on the one hand, if you just read the bulletin boards, and there's a fair bit of negativity out there, and, I do take your point. If you actually look at the volume in KVGOF stock, and you look at the volume this year compared to the volume last year, that reflects what I'm seeing in our Section 793 report. So while there's been a degree of negative commentary, that hasn't reflected in people dumping their positions. I see who our beneficial owners are every month, and month in, month out, those who bought into the story, who've really backed us as a company. Yes, it is difficult and painful. Where the share price is, no one wants us to be where we are, least of all me. I own nearly 2.5% of this company. I've got a lot of my wealth is tied up, so I want this to succeed extremely badly. But, we are in a phase in the market where things are extremely difficult. But what I see is that we haven't seen any sort of capitulation event in the company. People are they're holding firm. And by and large, I know there are one or two voices out there who aren't happy. But, at the end of the day, you've backed a business like ours. If you don't like what we're doing, sell your shares. It's as simple as that. No one's forcing you to be part of this journey. All we can do as a company is do everything we can to go and make that tier one discovery, as you led with at the start of this show. And in terms of what we're doing now in the KCB, I think this is now one of our best shots of achieving that.
And what's funny, I think it circles back to where we started, is that geology and marketing, right? It's a two-headed beast. And if I'm some sort of representative of a retail investor in this moment, it's just communication, right? That's all we can ever hope for, is good news and bad news gets shared, right? That's the crux of it. One final question here, and I'll let you on your way here. Thank you for your time. Just kind of as a follow-up to that one, with the benefit of hindsight, is there anything that you would do differently with your time as CEO of Kavango?
Oh, definitely. I mean, look, this has been an incredibly difficult job, very fast moving. There's all sorts that I've learned about this business and how it works. I think, we talked about some of the mistakes that we made on the comms. I mean, those are easy fixes for us to make. We've been very honest with ourselves. I think in terms of the organisation of the business, I would have made board changes much sooner. I think coming into this company, the way that things were set up really did reflect that performance in the past. The reason that this company was in the position that it was in April 2020 was because of the way it had been run. And I think that really when I first joined the company, what we should have done at that point is look to have restructured the board. And I think had we done that originally, I think it would have made things a lot easier for us, as we move forward. But overall, I've got to say, everyone within the team is now very happy. We've recruited some excellent people into the business, both in terms of direct hires and consultants that we've brought in. We've introduced training programs. We've invested heavily into our operations in Botswana. Our people are very happy. We've got an excellent team, a very loyal and dedicated team, and the work that they're doing is first rate, both from the work on the field. Our main camps are in Shani for the KSZ and Ditau projects, and up in the KCB near the town of Barnsley. Having seen these operations in August, I got this overwhelming sense of pride of how our money has actually been used and how we put it to effect. So overall, I think where we are today, we are in great shape. I would have loved us to have been in this position this time last year. And I think that would have been possible had we made some changes at the very start. But we are where we are today, and I think the future looks very bright for the business.
Can't go back, right? Only forward.
Exactly.
So I think on that note, final thoughts, final words to you, Ben?
It's just really that we touched on this. I believe there's a generational opportunity in this space. Our current market cap is £7 million. I've just recently bought some additional stock to bring my overall average down. I think we are, this is almost a once in a lifetime opportunity in this space. And I think if investors pick the right companies, they will make transformational money for themselves and for their investors. And my goal with Kavango is I want to put us at the head of that field. We are about to enter a truly incredible time in this sector. And we've done everything we can at Kavango to position ourselves that when the tide turns in public markets, we'll be among the first to move.
No, well said. And I think that's it. So thank you, Ben. I appreciate your time. Thanks to our listeners. If you're interested in Ben's company, you can find more information at KavangoResources.com, just like you think it would be spelled, Kavango. And you can find me under the name of Junior Resource Investing on YouTube, Spotify, and elsewhere at your favorite podcast hosting mechanism. Ben, thank you for your time.
Thanks very much for having me.